Welcome, everyone, and good day. Welcome to the Toron AMI Private Wealth Call. My name is James Porter, Partner and Managing Director here at Toron AMI, and I'm joined by Jamie Brubaker, our Manager of Client Services, and Pierre Bouchard, today's speaker, who I'll introduce a little bit more in depth here shortly. Personally, I think there's some irony in today's topic, climate change, often called global warming, which to many of us seems like a wild dream after we've come through one of the coldest winters on record. And speaking for those of us who live in Toronto, seeing a record cold day this week with snow. But nonetheless, we think it's a topic we're covering, and we believe that that climate change is a worthy topic. Here at Toron AMI, we have a great team of analysts and portfolio managers. That may not, in and of itself, be entirely different than some of our competitors in the industry. But I think where we are different is how we let our team explore the facets of investing and of risk management. I think that natural curiosity to refine our process, do better, and let our very talented analysts and portfolio managers look what we do in stewarding client money and capital is very important to us. And today really is about sharing how that comes to life, what it means, and frankly, how we think. So without further ado, I do want to turn things over to Pierre Bouchard. A little bit of background. Pierre joined the firm in 2007, has more than a dozen years direct experience in this space, as an analyst and portfolio manager. Prior to that, Pierre served our country in the Air Force as an engineer. Highly passionate about his work, and I think you will learn today, very studied in this topic of climate change. So Pierre, over to you.
Thank you, Jim. As Jim said, climate change is quite topical these days. I think we've all seen the last few weeks how the many UN and scientific reports coming out telling us that something must be done. As someone who has followed the story for many years, I can safely say that one thing is clear, is that status quo is not an option. Either we do nothing about climate change and we end up having or seeing the climate change around us and therefore forcing us to adapt, or we do something to limit climate change, and which basically means to decarbonize our economy, which is a big change by itself. Either way, as investment managers, we must pay attention to the challenge, both to manage the risk associated with all of this, and also to take advantage of opportunities. But let's not forget one thing, though. Just knowing and accepting that the status quo is not an option is an advantage by itself and a potential source of profit. By keeping an open mind, being proactive, and staying informed of the latest developments, we can hopefully identify trends and profit from them. So I hope this little short discussion will actually open the window into how we think at Toron AMI and how we approach this task of managing the risk and taking advantage of what's happening. So if I can start maybe with a very quick review of the current situation, and I will look at it from three angles. First, looking at what the scientists are saying. Then we'll look at what the politicians are doing and maybe our take on it and our conclusion on that. So if we look at the scientific consensus, scientists are in wide agreement in a sense. The climate has been changing and is changing, and basically greenhouse gases emission from human activity is the cause of that change. And what they're telling us is that we need to drastically change our emissions or cut our emissions if we want to face scenarios that are acceptable to us. And if we don't do that, or if we don't do enough of it, we'll face scenarios that are much more difficult. So from our point of view, we take notice here. On the political side, well, I guess progress has been very slow and largely underwhelming. The reality of climate change does not seem to be in doubt, but our ability to take collective action is. What we need is a global coordinated effort. But as soon as we try to answer the who is going to do what and by when, we end up with very, very complex negotiation with the countries worldwide. On the other side, or if we want to add the who's going to pay for it kind of question, then the task becomes almost impossible. So up to now, what we have seen is mostly a walk now and sprint later approach, which is You set aggressive long-term goals, do little in the short term, and then you hope that in later years you'll catch up. But we all know it doesn't work. So our take from this, we have the scientific consensus. We have what I've just discussed from the political side of things. So we do expect that we'll continue to take actions on climate change. But we think it's going to be much more of an evolution than a revolution. And as such, yes, we'll decarbonize our economy, but this will occur gradually. And because of it, adaptation will become much more an important aspect of it. So how do we put that into our own investment process at Toron AMI? I think first, I think it's important to explain what we are not, just to be clear. So we do not follow investment fads. We do not focus on concept companies, and we're not building green portfolios or portfolios solely based on climate change strategies. And actually, we don't really recommend these approaches. And for a very simple reason, we have to be careful of not simply jumping on the bandwagon and following the herd. We all remember the early days of the internet. And people thought, oh yeah, this will change the world. And actually it did. But we still had the dot-com bubble and the whole wealth creation and then the whole wealth destruction that followed. Global warming will change the world, but from an investment perspective, we believe that we have to take things on a more gradual basis. So at Toron AMI, we haven't changed our core beliefs. We're still focusing on performing solid fundamental research, managing risk through diversification and proper analysis, and we're still looking for the same kind of thing. High quality companies, strong balance sheet, cash flow generation, potential for growth, and companies trading at a reasonable price. This hasn't changed. What we're doing in terms of climate change is that we've added the climate change as a source of risk and opportunities in our investment process. So we're now looking at companies, and we've been doing that for a while, from a different or an additional lens. So maybe a good way to look at that now would be to actually look at examples of the resultant of that process. So let's talk about transportation. So during a talk on global warming, you would think that, I would say that cars are the enemy, and we should not invest in that. And to a large extent, it's true. We think that the auto industry will be an obvious target of increased regulation. But on the other hand, cars will be with us for a very, very long time. They're part of our economy, and they're a very important part of our economy. So from an investment perspective, one answer could be, okay, let's only invest in electric cars. Let's put all our cash in Tesla. So big upside, but also a big risk, which is not really our cup of tea here. We actually prefer Honda. So when you think about Honda as a company, so yes, it does offer fuel-efficient cars, and it has hybrid technology. It even has the electric car technology. But it's also the largest motorcycle and scooter manufacturer in the world, which is a very efficient transportation method. So when we put all of that together in the strength of the company, we think that the company is well positioned to take advantage of future emission regulation and future fuel standard changes. But also what's important to realize is that I just described kind of the global warming angle on it. But from our point of view, Honda meets all of the other criteria that I mentioned earlier in terms of investment. Just to stay on the transportation side, another example would be Valeo. Valeo is a European auto parts company. And what is kind of neat is that they are focused as part of their strategy on technologies aimed at reducing CO2 emissions. Here you can think of stuff like stop-start system. For people who don't know what it is that if you go on your car and start your headlight, the stop-start system will actually stop your engine while you wait for the light and restart it when you're ready to go, and therefore it reduces emission. And this is one example of the type of technologies that they offer. But once again, here Valeo meets all our investment criteria with simply the added benefit of fitting our climate change thesis. If we look at the Canadian example, Magna, another auto parts company. So the angle on this one is, so auto manufacturers want lighter cars to improve fuel consumption. One way to do that is to use lighter material, such as aluminum. For example, Ford, for their new F-150, increase the use of aluminum to decrease the weight. And basically the new F-150 with similar characteristics is 700 pounds lighter than the predecessor. So once again, we have Magna that fits all our investment criteria, but with the added benefits of solid capabilities in aluminum fabrication. So if you had asked me, why do we own all of these companies, but outside of a climate change kind of talk, I would have talked about cyclical recoveries in car demand in Europe and the U.S. I would have talked about the age of the car fleet in the U.S., growth in demand in countries such as China. I would have also talked about company-specific items, cash flow generation, balance sheet strength, the product offering that they have. And then I would have probably added at one point, okay, what kind of trends will influence the industry, such as the tightening of regulations due to climate change. And I think this is the lesson here is climate change is one of the many aspects that we are considering. It's not the overwhelming one, but it's an important one. If you can switch now to cleaner energy. It's a bit the elephant in the room. So we're talking about fossil fuels. And fossil fuels would include coal, oil, and natural gas. And these are obviously the main source of greenhouse gas emissions. And as such, they will and they have been the target of more restrictive regulation. But we don't want to just throw the whole thing out of the portfolio because of that. So we can break it down. So if we start with coal, coal is actually the main target of regulations, and we think it should continue to be the main target of regulations because coal-fired power plants are one of the biggest, if not the biggest, source of man-made CO2 emissions. So as politicians ramp up the global warming mitigation activities, coal is sure to be targeted, just as it has been up to now, but in a more kind of focused fashion. On the other hand, if we look at natural gas as it burns is a much cleaner fuel. And we think that natural gas could actually become kind of the fuel of choice for the next few decades as we attempt to decrease emissions from dirtier fuels and become a cleaner society. So in a sense, natural gas could be the stepping stone to a decarbonized economy. And that could be potentially positive for Canada as we have a fair amount of resources there. In terms of oil, which is kind of a bit in the middle, not as clean as natural gas, but it is not coal. The way we see it is like demand is supported by our current infrastructure. So we think about the fleet of cars. That won't disappear tomorrow. Demand in many developed countries has been decreasing, but in emerging markets it is growing quite strongly. So we think that our global economy still runs on oil, and it will probably keep running on oil for a number of years. And since we expect the climate change story to unfold as an evolution rather than evolution, we think there's still good investment to be made on the oil side of things. So in terms of fossil fuel, we're quite nervous about coal investment and longer-term positive on natural gas, and we're still positive on oil too. Here, I guess one question, since we're on cleaner energy, would be, okay, what about renewable energy firms? Are we invested in those things? And the answer would be, yeah. And an example of that would be a company called NextEra. This company is basically a utility company. It's a power generator, but it's the largest North American generator of renewable energy from the wind and the sun. So it's basically a utility company with a bit of a green option to it. So, and what's interesting, the company does not generate power from coal plants, has about ¼ of its capacity from natural gas, and it's more than half from wind power. So yes, we're invested in NextEra, which fits our investment criteria beautifully in terms of cash flow generation and all these things that I've talked about. At the same time, it's not the latest high solar flyer that you may have in the stock market, but we believe it has the characteristics to create long-term shareholder value. So once again, NextEra meets all our investment criteria, and we get the climate change angle as an added benefit. Maybe the last industry I can talk about is the insurance industry, so something a bit different here. So scientists tell us that with climate change, we get increase in extreme weather events, things like floods, droughts, hurricanes. Insurance companies are at the leading edge of extreme weather events, and they often end up having to pay for the damages. We can all remember the Calgary and Toronto floods and the related insurance stories that were all over the newspapers. As investors, this is actually a very important subject. Historical patterns such as weather patterns, mortality rates, flood cycles are used actually to set insurance rates. So if these patterns are changing, insurance companies must adapt. An example of this would be Intact Financials, one of our holdings. In its latest analyst day, which happened the last few months, Intact Financials has announced a 15 to 20% increase in rates, higher deductibles, and a few other measures designed to deal with the increase in the company weather-related claims. So here is a company that, it doesn't really generate from in a meaningful way emissions, but it's affected by what's going on. So we like Intact Financials. We feel that the company has the size, scale, and sophistication to deal with these changes, but we are nonetheless monitoring the situation because we want to make sure that the steps they are taking are actually appropriate for the challenges they are facing. Longer term, we would also think that insurance companies should also support other projects to make ourselves more resilient to weather events, such as improving building codes with governments or supporting infrastructure projects to stop floods and things like that. And this would actually also support various other industries such as the engineering and construction industry. But I guess this is a bit for another discussion. So this is kind of my last example. So as you can see, there's many aspects to consider for an investor when thinking about climate change. And we have just scratched the surface. Hopefully the little discussion showed you that at Toron AMI we are managing climate risk very seriously, and hopefully give you a bit of an insight of how we integrate the analysis of climate change into our fundamental research process. You can rest assured that we will continue to monitor the situation for years to come, hopefully taking advantage of opportunities and avoiding the pitfalls. So I guess at this point we would be open to questions.
Perfect. Thanks, Pierre. So in order to ask a question, on the right-hand side of your webinar, GoToWebinar screen, you should be able to raise a hand. If you raise a hand, I'll unmute your line and you can ask a question. So maybe we can start with a question in the room. So James?
Pierre, I have a question for you. You and the others on the portfolio management and research team in your work for both the Canadian equity total return strategy and the Canadian opportunity strategy, which looks at smaller companies, you interview, meet with, and obviously analyze a wide number of Canadian companies in diverse industries, everything from services to materials to energy and so on. And I'm just curious in terms of your interactions with those senior managers, CFOs, CEOs at these companies, how you found them to be on this topic. Is it front of mind? Is it a consideration when they're managing the companies and putting their plans together? Mm-hmm. How hot of a topic are you finding this to be with company management in Canada, companies we own, and maybe some of them that you see who we don't know?
It's actually quite interesting because also we've been asking these kind of questions about their plans for global warming and how they're managing their own risk and planning their business models around that. And if we go back a number of years, often we would have blank stares. Companies were not ready to answer these kind of questions. But as time progresses and as people like me keep asking the questions over and over each time I meet with them, they're getting better at it. Are they where we think they should be? Probably not. And obviously here I'm talking on average. There's quite a wide range here from nothing to very good. But it's also something that is evolving and that companies are getting more and more aware of, either because people like me are asking the questions or they're being forced by regulations and government or by other companies that they are dealing with that are forcing them to deal with. For example, Walmart has a plan to reduce their emission by some quite large amount over a number of years. So if you're supplier to Walmart, I'm sure, is asking the same question. So how are you helping us meet these goals?
Okay.
Hey, Pierre. Yeah, I'm intrigued by a couple of things that you mentioned with regard to companies in the portfolio currently that have essentially a free option embedded in them. You discussed Nextera and there being a bit of an option around the extent to which they generate green power. Same with Valero. On the other side of the coin, it seems to me that companies like on the insurance side, for example, or on the oil company side have a bit of a risk embedded in them if things develop more quickly on the climate change side than we might be counting on. I'm just wondering to what extent any of that plays into the analysis of the companies. I totally understand the notion that it's a component, but it's not something that you're viewing as an imminent risk. Is there a way to characterize how you think about that really as part of the process?
If we go back to investing in general, every single company has risk, whether it's environmental risk, global warming, or some other risk. And at the end of the day, it's a question of does it kind of meet your minimum standard of quality that you want in your investment? And if it becomes and then if it's above that, it becomes kind of investable. And now it becomes a question of how much you pay for it. So if there's very little risk, you're probably going to, and growth and everything is perfect, well, you'll probably pay more for that. But if you have more risk items, then you may want to, the reasonable price is lower in a sense. But the key point, though, is that there's still a minimum you want to meet here. So if the risks are too big, well, you still don't want to touch it. And therefore, if we link that back to global warming and the effect of climate change, if you think about the insurance company, in a sense, it's not because we have extreme weather events that suddenly the industry will disappear. It's more of a question, can they adapt to it? And will we see more of these kind of one-time events that keep happening? And as such, if that's true, then you start thinking about, okay, what kind of valuation do I put a company that is affected more regularly by these one-time events that are not one-time anymore? So you would think about it from that angle there. But at the same time, it still has to meet your minimum quality requirements that you want to see.
Excellent. Thanks, Pierre. So we have a question to the online chat. There's a huge public opposition to new pipelines that would allow the Alberta tar sands to expand, and civil disobedience, both planned and underway, to stop dangerous practices like hydrofracking and tar sands expansion. That is, it's important to pay attention to people and not just governments in terms of how quickly carbon assets, for example, might become stranded.
Yes.
How do you consider this when you're thinking of continuing investment in oil?
When we think about, the way I presented government as kind of the source of regulation and all this, and this is what we look at. But obviously, what feeds into what governments do, you have the will of the people, special situation of special groups that are putting pressure, whether it's the oil lobbies or the green lobbies, or so this is part of our thinking. It goes deeper than thinking, okay, what is Prime Minister Harper going to do? Kind of concept. So that's the first step. Within STOP, we just talk about government, but it goes deeper than that. And as such, from our point of view, we're trying to figure out how the world will evolve over the next, or within our investment horizon. So at this point in time, we still believe that it's going to be more of an evolutive process, and therefore oil still plays a role into our portfolio at this point. But at the same time, this is, in my mind, a risk to our view, and that's what we have to keep monitoring. And if the facts change, I will change my mind. But if there's suddenly a much stronger push towards, decreasing emissions, and it affects coal and oil much stronger than we expect, we'll change our mind here. But at the same time, at this point, this is not what we see as our main scenario and how things will play out.
Okay, perfect. Thank you. So we don't have any more questions on the line. I just want to say thank you to everybody that joined. We will be making available a recording of the call. And of course, if you have any follow-up questions or anything like that, you can contact your portfolio manager, and I know they'd be more than happy to make an introduction to Pierre if you've got specific questions for him. Thank you again to everybody. Thank you, Pierre, for taking the time. And hope everyone has a great long weekend and hopefully some better weather for it. Thank you so much.